So does Seth normally come on these things, dude? Like, because I haven't seen him on.
Yeah, you know what? Normally we do the webinars with Seth on. We actually had a webinar at noon today. We do one on the third Saturday of the month at noon. So he did the one today at noon. I'm doing the one now. So it's a
Okay.
little tough to do two in a day. So yeah, basically. But he was going to join us here, but he's down in Philly right now with his family. So he worked till about 1, and now I'll take over the afternoon shift here at PCG. You know.
Got it. Got it. That's good. That's fair. It works out. So you
Yeah,
guys been doing this show every Saturday at 12, you said? What's that show
no,
on?
we do a webinar every third Saturday. We do it
Okay.
the fourth Tuesday and the first Thursday.
Oh, wow. So there's a lot.
Yeah.
And is it just primarily apartment building investing?
Yeah, you know, it's pretty much similar presentation, but it's angled differently. One's more focused on IRA, one's more focused on kind of diversifying out of the stock market, and then the third one's about active investors becoming passive. So, you know, those are the three topics. But you know, at the end of the day, we're talking about the same thing: investing passively in apartment buildings. And
Oh,
we're kind of mixing that up right now. We may develop a site. We are developing a site right now that is going to basically, you can watch the webinars anytime. And we'll see. We may still do live webinars, but 3 a month
do you
is
even need
kind
a
of
site, bro? Like, wouldn't you just want to just put it on like Facebook or YouTube?
well, yeah. I mean, right now I'm working with a group that is developing what's called a click funnel. Right, you're familiar with that, I'm sure,
Yeah.
right? So yeah, so basically, yeah, our site right now, peoplescapitalgroup.com, is great for giving information, watching our podcasts or webinars, signing up for a webinar, but it's not a click funnel. It doesn't necessarily, it's not a good like landing page or lead driver. So basically, we're having a click funnel developed right now that'll help us drive leads, because we put a lot in Facebook marketing, and you look at an ad spend of $5,000 or $10,000 on Facebook marketing, and I mean we can get people to our site usually for less than $1.50, but we will have a retention ratio of like 1% or something, which is really we're trying to improve that.
So let me ask. Let's talk some of that right now. So while we're waiting for people, or we're giving people time to log in. So you said that so $1.50, is that an opt-in or is that a click?
That's an opt-in. That's to retrieve someone's contact information through, maybe they download an ebook or they sign up for a webinar. So which pretty good. Getting traffic to the site is less, but to get an actual sign up is an actual lead is about $1.50.
Just froze. Okay.
Yeah, with our marketing, the Wix videos, different videos we have, different social media marketing. We do LinkedIn and Facebook. Although right now I'm working with a YouTube consultant to develop YouTube ads that will move traffic to our ClickFunnels page, which is also being developed by a different group. So we're totally revamping our marketing and where the leads go, because our retention ratio was not very good. I got about 1% of the leads that came to our site. Oh no, wait, hang on. What were the numbers again? It was 3,000 visits. Yeah, it was per visit.
What's the cost per visit? Do you know?
Yeah, that was around $1.50 or so.
Okay.
In general, but
so then that means click through is $1.50.
Yeah.
And then opt-in is probably way higher than, dude. Opt-in is probably like $5 or $10.
Sure. Oh, absolutely. Yeah, I mean, generally you're looking at around $50
per
lead.
Per opt-in.
Yeah, per opt-in. And so we're trying to get that cost down.
Dude, you should just do this. Instead of giving away your ebook, you should say, I'm giving it away, but you got to pay for shipping. That way it covers your opt-in.
Right. Yeah, that's true. I mean, you're going to get less opt-ins then,
But you're getting the same amount already, in a way. Or you can give away something else. You gotta give away like a cheat sheet or something. These are the 10 things,
of greater value.
Yeah. These are the 10 things you look out for. And then,
Mm-hmm.
you want my book? It's free, but you gotta pay for shipping. Bam, that's it.
Mm-hmm. Mm-hmm. Yeah, it's true. We really don't drive any revenue from education right now, or coaching, or selling the ebook, selling any content we have. We really give it away for free if people are investing with us, or
Yeah.
it's just
You're
all
actually even
on
losing
YouTube.
money.
It's out there.
Yeah, you
Yeah,
actually even
no,
losing
we
money.
definitely are losing money. Oh yeah, I mean, there's definitely ways we could make more money here and there with our marketing. I know, and I think that we could charge for shipping for the ebook, and we could do a boot camp, or we could do something of value, like a package of spreadsheets and documents we use. But part of my pitch is like, I'm not one of those guys that sells all that stuff. I'm a real estate
True.
investor. Here's my
I'm gonna
knowledge.
keep it real
And people
estate.
kind of like that. Yeah, people kind of like that about us and me. Like, I'll have investors come to me and be like, I like how you kind of knock the gurus sometimes that are out there selling books and CDs. If it was so easy to be a real estate investor, they'd be focused more on that. But so I kind of do knock them sometimes, but at the end of the day, it's a great model because it's very expensive to raise capital. It's very expensive to find a good deal, put together a whole syndication. So yeah, if I could charge a couple bucks for shipping and handling for the book, cover my cost of, because it sucks when you're writing an ebook, you're paying to give it away.
You see this?
It's definitely, yeah. There we go.
Yeah, it's fair, dude. Shipping is fair. Send over
There we
the
go. We
info.
got one. How many
What
people are
happened?
listening to us?
So right now you have like
Okay.
25 people, dude.
Oh, okay. Well, then that's interesting. I'm talking to you just like I would talk to you on a private phone call from business owner to business owner,
Yeah. So I'm gonna let you take over, bro. All right. I just want to get you started. Take over, all right? And then by the way, you can like when you're done, just you can just end you can just exit and end it, all right? Because we're not gonna you can take your time, you can do the Q&A, take your time, and just end it.
All right, good.
All right, thanks so
Great.
much,
All
man.
right. Thank you, Nick. Excellent.
Anytime.
Well, that's great. I didn't realize so many people were listening. They got a little insight there to Aaron and Nick talking about business. That's good stuff. All right. So everybody, if you do want that ebook, that is on our website there, peoplescapitalgroup.com. I'm Aaron Fragnito with People's Capital Group. Thanks for jumping on here. We're going to talk about real estate syndications, how we pool capital together, how we help people invest in real estate passively. If anyone has a question, please type in the Q&A. I encourage questions. I encourage interaction here. So if anything pops up right in the Q&A, I'm going to answer all the questions at the end of our presentation here. I'll go for about 30 to 40 minutes. We'll open up for Q&A as well, about a 30-minute presentation here. And so again, my name is Aaron Fragnito. Quick disclaimers: this is not legal advice, tax advice, or solicitation for funds. So there I am working with a private investor. Seth Martinez and I, my business partner, have been doing this about 10 years. And we flipped houses. Many of you maybe have seen me speak at Nick's events or other RIAs. We have our own real estate networking group that met in Berkeley Heights in the past. We've met in Morristown in the past. And we're doing our webinars now online with them going on, but we have a very active real estate network group called New Jersey Real Estate Network, meetup.com. You may be a part of it. We have about 3,600 members in that. But our mission is to transform personal finances and quality of life by creating passive income streams through real estate investments. So as I was talking to Nick there, I don't sell books or CDs. Really, we are just, so we don't do the boot camps. We're not the gurus. We know what we're doing. We've been doing this long enough. We've done hundreds of transactions. But we believe that if you're going to be a real estate investor and work with passive investors, you should focus on that, and not so much the education side of the business, which can be a very profitable business, but it's not our focus. We also read Robert Kiyosaki, and that changed our lives completely. If you haven't read that book, Rich Dad, Poor Dad, check it out. The moment you make passive income and portfolio income a part of your life will change. That's a Robert Kiyosaki quote there from his book, Rich Dad, Poor Dad. And I read that book senior year of college as I was graduating from Rowan University as an entrepreneur major. Around 2010, into a pretty tough job market and pretty crazy real estate market as well. Seth had sold a medical billing company, and Seth Martinez was there on the left, was buying real estate in Newark and Essex County, Union County, North Jersey in general, and managing it well. And he was getting real estate for crazy low prices. And I was his realtor, and we worked very, very well together. Seth had the management skills and the capital to get started. I was the deal guy. I knew how to source a deal. I was good at marketing and branding and sales. So together we teamed up, and we bought a 6-family from a property we got from a We Buy Houses sign. We used to hang on telephone poles there. And what ended up happening was we bought the property for about $220,000. We put about $50,000 into it. It appraised, then we got it leased up completely. It was cash flowing. It appraised for about $400,000 or so, and we were able to refinance the property, get back our entire initial investment. The buy, renovate, and refinance strategy we're going to talk about today, how we do that with large apartment buildings, and how we built up to 100 units working with passive investors, where they get to own part of the building as Seth and I do all the heavy lifting, the day-to-day operations. We work with our in-house management company, which is practice of the art of repositioning apartment buildings, which basically means you take a mismanaged apartment building and you make it a more profitable building by lowering your expenses and increasing your income on the building. And we're going to talk about how we reposition apartment buildings tonight. We're going to talk about how we work with passive investors and help them get the tax benefits, the cash flow, the large equity gains of North Jersey apartment buildings without having to do all the day-to-day heavy lifting. So together we bought and sold about 250 properties. We manage a $10 million portfolio of our own real estate only right now. And we're going to break down here what we're going to do today. So number one, why do people invest in New Jersey apartment buildings? Okay, why do we like this market? Why have we invested here for 10 years? And what have we learned? Number two, why do people prefer a syndicated investment and investing here? That's when you pool capital together. That allows smaller investors to get into larger buildings. Larger buildings are safer investments. We'll talk about that as well. Number three, why do people value PCG's service? So we've created a nice turnkey experience here where passive investors, maybe with a lot of real estate experience, looking to kind of work less and build their portfolio exponentially, or inexperienced investors can start owning large-scale real estate that's professionally managed. We're going to explain how we do that. So let's talk for a second here about the Corona, COVID-19, the market impact here. Seth and I flip single-family homes. Maybe some of you have seen our properties for sale on njfixeruppers.com. We have a whole residential branch that flips properties and wholesales properties. We've done hundreds of transactions there, made millions of dollars in that space. However, it's not really our preference. We actually prefer apartment buildings, the garden-style apartment buildings you see here. The reasons for that is because today, with everything going on, we are still at 90% collections. Okay, that means we're collecting 90% of our rent. We're cash flowing on our real estate. Anyone who can't pay, we work out payment plans with them. And apartment buildings allow us to make cash flow every quarter. They allow us to get tax benefits, so we don't have to pay taxes on that cash flow coming in. And then it allows us to get large equity payouts upon the refinance every few years. So single-family homes are great. Seth and I have made millions of dollars flipping houses. However, it's a very based on the market values of homes in the neighborhood, comparable sales. It's at the mercy of the markets. Okay, there was a pause there of single-family home sales for a few months with the Corona going on, where the apartment building values actually continue to grow. Rents have grown through this time. Collections remain strong. And we've also looked into other parts of this business, but we really only prefer apartment buildings. We've looked into self-storage, which is profitable, but at the end of the day, people are going to pay their rent before you pay self-storage. Office and industrial are great as well, but actually right now office is extremely soft and industrial is not our cup of tea. You have to know what you're doing for each specific market class. We try not to stray too far from what we do best. Retail is very soft with online shopping and challenges in the restaurant space as well recently. Hospitality and senior housing is a good space, but that's very saturated with many institutionalized investment and investment funds and hedge funds getting into that space. So therefore, it props up the price of that real estate. So we prefer apartment buildings. We've also dabbled in single-family homes and smaller multifamily for many years, but apartment buildings are tried and true through thick and thin, and that's what we really like about them. Okay, so let's talk about strategic way forward here. With everything going on, we work with a lot of passive investors. They come to us for financial guidance as far as what's the best ways to invest right now with the pandemic going on. And we work with a lot of new investors getting into real estate, getting into syndications, learning more about what a syndication is it the right fit for them, or should they be more of an active hands-on investor calling the shots day to day, running around and managing the contractors, managing the projects, right? What is the right fit for you? So how to plan strategically here if you're looking to invest in a syndication, to invest during a pandemic right now. I know there's a lot of challenges going on. A lot of investors say, well, with everything going on, I want to just stay invested in the stock market or stay invested in whatever I'm doing and not make any changes, where we find that actually during a pandemic, during these challenges we're facing right now, it's one of the best times to just diversify. If you're not invested in a syndication or you're not invested in professionally managed real estate that's large scale, ideally apartment buildings that everyone can afford, class B and C apartment buildings in high demand markets, which we're going to talk about today. If you're not invested there, then you might want to look into possibly diversifying into that space where you can get tax benefits and cash flow and not be the mercy of the stock market so much. Say if you're IRA or solar 401k or just capital investment, you always want to be diversified. You always want to educate yourself. What's the right market you want to invest in? Who are the operators you want to invest in? You want people with a track record of success. When they have a projection or a target in the past, did they hit that target? Did they do better than that target? Right? I mean, you have to figure out who you're working with is really the biggest question in real estate. You can make money in many markets in many ways, but the operators is the largest decision, the most important decision you'll make when investing with partners or investing in a syndication real estate. So you always want to work with experienced professionals, no matter who they are, and make sure that their history is tried and true. And do they do better than they said they were going to do in the past? And here at PCG, we historically have done better than our projections, done better than our targets, and that's very important here at People's Capital Group to recognize. So things to take into consideration: the history of the market when you're investing in a market, the degree of risk of an investment. Are you going to do ground up construction on beachfront properties in Miami, which can maybe be high reward but high risk, or are you looking more into location of proximity to where you live, which a lot of our investors do value here, being able to go to the properties they know about, Newark, New Jersey, or Patterson, New Jersey, or Elizabeth, or Jersey City. They recognize these cities. They recognize their investments making a difference there, buying mismanaged properties and improving the management, making it a better place to live. So a lot of our investors like investing locally, but of course you don't have to invest locally. We work with investors from all around the nation. And so it's a preference for some. Others, it's not that big a deal. Why do investors like New Jersey? Okay, so New Jersey rents are below the national average, which indicates high earnings in the labor force with room to increase rents. Rents have continued to grow through this tough time. Rents have grown in the past as well here. We focus on North Jersey real estate within an hour of Manhattan. So we continually have a highly skilled workforce that ranks #1 in education, #3 in median household income. New Jersey has so high income, high education that allows for a great pool of tenants to consistently pick from, as long as you have well-managed properties in decent areas. And the state is home to 20 Fortune 500 companies, #1 in drugs and pharmaceutical jobs, #2 in foreign investment as well. So our investors are seeking legal tax shelters and predictable investment returns to confidently fund important occasions in life. This it could be a wedding, it could be putting your kids through college, or just making sure your 401k or IRA is growing at a strong rate and well protected and predictable, right? How much cash flow is your IRA going to earn? How much value is it going to grow by? How much is the value going to grow by over time, right? We do feel that the New Jersey apartment buildings, they are more predictable than a lot of other asset classes, such as the stock market and index funds within the stock market. So people are seeking low risk investments. That's why many investors work with us here at People's Capital Group. And by buying bigger apartment buildings, we spread out the rental income amongst many apartments so vacancies hinder us less. If you lose one tenant on a 25-unit building, you can still cover your costs and still cash flow in the real estate, even if you lose 3 or 4 tenants. On a 2 or 3 family building, if you lose one of the tenants, well, you're not going to be able to cover your costs. You may have to write a check to cover those mortgage payments and taxes and insurance and other costs to maintain the property. So larger buildings are safer investments. Over time, they earn better returns with the cash flow. They're hindered less by repairs. If you have a $5,000 boiler to fix or replace in a 2-family property, well, there goes your positive cash flow for that whole year. If you have a $5,000 boiler to replace in a 40-unit property, well, that might be, a 25-unit property, that's a fraction of the rent roll for the month, so it's not going to hinder you as much. And there's repair reserves as well with larger properties. So our investors want to invest in ideal New Jersey properties with easy New York City commutes and that meet the New Jersey housing demands. Nice, clean apartments with the whistles and bells that tenants are looking for. We know that a happy tenant equals a happy investor. So we make sure that our tenants are happy first and that we give them a quality of life that they're willing to pay a little bit more for as a safe, clean, nice apartment building to raise their families in. People will enjoy that and people are willing to pay more for well-maintained units. So our investors enjoy well-managed New Jersey apartment buildings as they do fare well in recessions, as we've seen here through this tough time, and they keep predictable cash flow. Also, tax depreciation is a very valuable part of owning real estate. Tax depreciation allows you to write off the cash flow that's coming out of the property, and that allows you to therefore pay no income tax on the cash flow you're earning on the real estate. Now, if you're earning a dividend on a stock, that dividend is taxed, where in real estate, the cash flow is written off with tax depreciation. That's one of the major differences between real estate and stocks. Real estate offers tax depreciation where stocks do not. So at the end of the day, our investors are seeking legal tax shelters, predictable investment returns to confidently fund those important occasions in life, as you can see here, weddings and travel and college. And we work with sophisticated and accredited investors to buy large-scale apartment buildings within an hour of Manhattan that are often a little bit mismanaged when we buy them, but we improve that management with our in-house management company. And as I was saying earlier, larger buildings are safer investments. And with larger buildings, we're obtaining a larger mortgage, of course. $3 million building we're buying right now requires us to get about a $2 million mortgage. So in this case, if you're going to buy a piece of real estate, let's say you and your friends get together and pool some capital and buy a small apartment building, that could be a good strategy. But in that case, you're going to have to personally guarantee a mortgage. Okay, that means you're on the hook through foreclosure or bankruptcy. You're personally guaranteeing that mortgage. That's on your personal credit. And Seth and I will personally guarantee the mortgage to make sure that our investors don't have to. Okay, so it's a big, big amount of risk on our shoulders that ensures that we make sure we hit those marks and our targets, our goals for our reposition. And at the same time, it allows us to get great terms on that mortgage, right? Lower interest rate, lower closing costs. This allows our investors to get better cash flow as well. But more importantly, we're personally on the hook for that, where our investors are not, and that takes a ton of risk off their shoulders. And that's how we structured here People's Capital Group. So we personally guarantee that loan, and that gives us great terms with our banking relationships that are long-term. We get very good banking terms as well on our mortgages. So ideal New Jersey apartment buildings with easy work and entertainment commutes to New York City. We get a lot of millennials to rent our units. All the whistles and bells, the stainless steel appliances, granite countertops, without breaking the bank, of course. We buy middle of the road, Class B and Class C apartment buildings. We've done very well in Newark, Patterson, Passaic, Elizabeth, Jersey City. We focus on properties that are maybe within 10 or 15 minutes of a train station that allows you to commute to Manhattan in an hour or less. And North Jersey offers a lot of those opportunities. The hardest part is finding a good deal. We have a great pool of investors. We have about 30 investors we already work with who repeat invest many time again. The hardest part is finding a mismanaged, discounted apartment building here in New Jersey. We'll talk about how we do that a little bit later in this presentation. Okay, so why do people prefer syndicated investing? Well, it's quite simple. People don't want to manage the property day to day. Real estate property management is not an easy job. It's a thankless job. It's taken us years to develop a good system where we buy, we can, if you look at a regular management company, you say, okay, I want to just, reposition an apartment building, find out ways to make more income on the property, lower our expenses, get the best contractors in here for the best price, renew leases at an increased rate every year, and turn the property over so it goes from a zero to a hero. Most management companies will say, thanks, but no thanks. We're looking to just collect the rent when it's due and call a plumber when the pipe leaks. That's not what repositioning an apartment building is. So we quickly found out that if you want to have a strong repositioning company, you actually need to have a management company yourself that's developed just for taking mismanaged buildings and making them cash flow machines. So syndicated risk, it shifts that investment risk. Also, we pool the capital. So a large pool of capital means an investor with, say, $30,000 can get started in owning a $3 million property. That's completely professionally managed with years of experience. So our investors like the idea of tapping into expert real estate knowledge, being lifted up above the pitfalls. And it's taken Seth and I about 10 years to develop our management company to become a rock star management company that can take a mismanaged building and really create good positive cash flow out of it, and therefore build the value of it, allows us to refinance over time. And our investors appreciate their free time, not having to look at hundreds of deals to find one, not having to manage the properties day to day or personally guarantee a mortgage. We do all that so our investors don't have to. So once we buy the property, we immediately force equity into the building. This is done by renegotiating leases, figuring out ways to lower our expenses, figuring out ways to make more income on the property, maybe by putting in storage in the basement or laundry, or charging for parking, putting utilities over to the tenants. There's lots of different ways to build value into the property, lower your expenses, increase your forms of income. And it's also a bit of a give and take. We have to make sure that our tenants are well respected. We don't just buy a building and say, new sheriff in town, rents are going up. There's an art to it that you have to work and respect your tenants, follow the rules, whatever if there's rent control as well, make sure you know the rules of the road. That's our job to make sure we follow the rent control laws as well. And in these cases, we improve the units as much as necessary. Maybe the dishwasher's been leaking. Maybe there's issues with the flooring or whatnot, cabinets. So we improve the units. We give the tenants what they're seeking within reason so that they're satisfied with the unit. And overall, the building improves as well, the common areas. And we make sure that tenant understands that there is a new management company now that when they have a problem, they can go right on an app. They can put it into our system. Boom, we're going to have one of our contractors come right out and fix that problem. So they may have been dealing with a bit of a slumlord before, but now when we buy a building, they're dealing with a professional management system. And because of that, they're going to be treated better, respected better. They're going to live in a cleaner, better building. But the rent's going to be increased to a fair market rate, and the rent has to be paid on time. And tenants understand that when you give them a certain quality of life, they're going to work with you in a certain quality of tenant as well. So it's a give and take. And we know a happy tenant equals a happy investor. And here at PCG, we really have developed a nice management system where our tenants feel very comfortable and very pleased when we enter a building and take over control of it. So after 3 to 5 years of improving the building, we go to do a cash out refinance. We're going to talk about what that is in a few slides and how that works for our passive investors. And here's how we find the deals real quick. So we'll invest up to $10,000 per month in marketing to find the best discounted properties. Okay, we'll look at 400 properties sometimes to choose one. We have a network of over 10,000 real estate professionals. This is a network of brokers and wholesalers, landlords, investors, people that contact us to buy their real estate. We find off-market deals. We do not buy on-market. We sometimes do, but for the most part, we buy off-market deals. And we really try to focus on discounted, mismanaged buildings that are not known to all the buyers out there. Newsflash, if something's sitting on the internet, it's probably not a good deal, especially in a high demand market like North Jersey here. So once we find a discounted apartment building, we secure the funding for it. We've done this with over 250 properties, over $40 million. We have a $10 million portfolio right now. We have about 86 rental units, and we recently sold a portfolio of buildings also. As we were saying before, we take on the risk of repaying the banks. That makes sure we're hyper motivated to remain vigilant and hit our marks on repositioning the building. And now I'm going to talk about number 3. Why do people value our service here at People's Capital Group? All right, we're going to talk about how we refinance the building. We're going to talk about how we reposition the building a little bit more in our aggressive calculating business model. So as I was saying before, we'll invest $10,000 in some months to find very good cherry-picked properties for our investors. We complete multiple levels of due diligence on the property once we find that 1 out of 400 properties that we choose for equity opportunity, forced equity opportunity. We look for value add. We look for properties that have rents below market value, more opportunity to make more forms of income, like storage in the basement. And we look for other opportunities like cleaning up the property's expenses, lowering the expenses in a number of ways. Maybe there's people on payroll and it's an inflated payroll on the property. We see that often. So once we've cherry-picked that property, we find that right mismanaged building that could be purchased for a discounted price, and there's a clear value add strategy.